Hey guys, welcome to another video on Brand Advice. We talk about business and finance. My name is Bharat. If you're new to the channel, consider subscribing and turning on the bell notification so that you do not miss out on any of the future videos. In this video, we're going to talk about how exactly do you invest when the stock market is trading sideways. That is correct. The stock market doesn't always go up. It can start trading sideways. Now, most of us who know anything about the stock market, we are essentially consuming all of that information in English. That means you're essentially listening to a lot of American YouTubers, British YouTubers, and so on. And you're getting their takes on how their stock market works generally. So this is how the S&P 500 looks like. Of course, it has been going up nicely, but if you take a look and zoom in to some of the areas, for example, from 2000 and around 2008, it has been still trading sideways. And if you take a look at DAX, it has also not been giving such great returns. Over the long term, it looks like it's going up. But again, if you take a look at this phase from 98 almost to 2008 or even 2012, it was pretty much trading sideways, even 2013. And now if you take the next example, which is the Japanese market, here you can see since the very beginning, I think this shows a time of around 91 or something, till now 2021, it has pretty much been going down then going up. So now you can still consider it trading sideways. Now, what kind of things can you do in scenarios like these? Many people, as long as bull markets are happening, where stocks are generally going up and the investor confidence is high, most of the people, they go for the growth stocks. They're okay, this is going to give us more return towards the end, because if you take a look at many of the growth companies, they're able to give you returns anywhere from 30 to up to 70% per annum. Now again, you have to do stock picking here, which is for some people it's easy and they're comfortable with that. For others, that's not so much the case. Whereas for the dividend companies, the capital appreciation is rather less, so it can go anywhere from 3 to 10% or something like that. But on top of that, they are also paying out dividends. So that could be another 3% of cash flow, 3 to 4% of cash flow for you, depending on what kind of company you're investing in. Now, when you're investing in dividend companies, the nice thing about the dividend companies is that it doesn't matter if the stock market is going up or it is going down, they are paying you a cut from the profits that they're generating. This is very nice because this is independent of whatever the stock price does, which is very nice. So that means even if your capital is going down in the books, but you're still getting some kind of cash flow every single month. So this is very important, because if you have to pay your bills or something, then growth stocks are not going to help you until the time you actually sell them. But if you are actually investing in dividend companies, then the cash flow that you're generating, that is very nice. For example, for me now, to get to a stage where I'm getting over 100 euros per month in dividend from 2 companies, I had to invest 30,000 euros. During recession, unlike what many people claim that, real estate could be a very interesting thing, you have seen what has happened in US. The landowners who actually took loan to buy different kind of apartments or houses or something, they were not even able to pay their own rents. The situation for some people came so bad that they had to move out of their own house. They had to shift to their friends or parents' place so that they could rent the other property out too, so that they're able to pay their mortgage and stuff. So in the recession, if the government just says that we are not going to allow you to charge your tenants any kind of rent, then what can you do in those kind of scenarios? So I do not think that completely just putting all of your money in real estate or putting all of your money in stocks, that is a good idea. I think a healthy combination is not bad at all. When you're taking a look at dividend companies, what I like to see is the dividend aristocrats, which have been increasing their dividends since 25 years. There are a total 78 companies, or dividend kings, which have been increasing their dividends since 50 plus years. There are a total of 31 of them, and 29% of these companies are essentially in consumer defensive. So consumer products, you have your Procter & Gamble, Colgate, and all of these companies. Now I'm going to show you 5 of my favorite companies which I would be investing in if recession comes, if the stock market starts trading sideways. So for this, we are going to first start with beverages. So in beverages, the first one that I like is, of course, Coca-Cola. I had a lot of money invested inside this. They have been increasing their dividends since last 59 years, and they pay their dividends quarterly. You're getting a dividend yield of 3.09% on this. Now let's take a look at the next one, which is Pepsico. It has around 49 years of dividend increase. So this year it is going to be added into the dividend kings, which is again going to be very nice for the stock price too. You see here the dividend yield is around 2.87%, which is again not bad. If you take a look at the blue line, which is the price of the stock, it has also been going up. So you're having capital appreciation throughout the years, and you're also getting dividends, which is very nice. Now let's take a look at other things. These were beverages. Now we are going to take a look at the consumer section. They have increased the amount of their dividends by 10%. So if you take a look here, the previous amount was 79 cents and now it is 86 cents per stock. The dividend yield is at 2.3%. And they have been increasing their dividend yield since 59 years. That's why they're the dividend kings. Now let's take a look at the next company, which is Colgate Palmolive. Here you are having again 59 years of dividend increase and 2.19% of dividend yield. Again, dividend kings. In the beverages, Coca-Cola, like we talked about, are the dividend king right now, and Pepsico, they are going to join this time. J&J, Johnson & Johnson, they are pretty much the only company in pharma sector which has been increasing their dividends since 50 plus years. So they have been increasing their dividends since 59 years, and their dividend yield right now is 2.52%. And they're also a dividend king. Now, of course, we have talked about essentially 3 sectors, and all these 3 sectors are pretty much whatever the people consume in their daily life. And this also makes sense because when a recession is happening, the only thing that you think about is, okay, I want to save my money to the side. I only want to buy the most important things. I don't want to buy a real estate or something. I don't want to like invest my money in stocks or something like that. The fear is just high. The uncertainty is high, and people just want to buy the most necessary things. If you take a look at Procter & Gamble, you have, things like Head and Shoulders and all of these other kind of like products with Colgate, toothpaste and everything. Coca-Cola, your normal, beverage, Pepsico, then Johnson & Johnson, your like baby products and stuff, and also like, other medicines which many people rely on. So for me, these 5 companies are very conservative and they can go through another recession just fine, like they have been going right now. Other sectors, for example, financial, energy, technology, or even like real estate. So you have these like real estate investment trusts or something. I would be more careful about them because again, not many people are, just expanding during these times. They're cutting their workforce and not necessarily thinking about putting more money inside in different kind of investments. So this is pretty much my take on it. Like if you think like in 2021, there are definitely going to be some kind of changes. We don't know what that is going to be. The first thing that I can think about is, of course, taxes. I don't know like how this inflation or something is going to hit the economy, if it hits at all, because so far we haven't seen anything. Maybe when the businesses open, might be a possibility, but we never know. But if that happens and all of the markets start going down, then my first idea would be to like take out the money that I've made so far, wait for a while, and then put them inside the dividend company so that I'm still getting the cash flow while the stock market is busy correcting itself. So this is pretty much my thoughts on it. If you have any kind of questions whatsoever, let me know in the comment section below. If you want to sit down for a one-on-one appointment, I also offer that, which you can also book with the link given in the description. Thank you so much for watching this video. I'll see you in the next one. Bye.